What's interesting now about crypto, I don't consider crypto Bitcoin or Ethereum. Okay. Yes, they were the pioneering assets, but I'm considering crypto as the 12th sector of the S&P.
Hmm.
It hasn't been declared that yet, but I think that's where we're going. And so when you talk about running a mandate like I do for institutional clients or institutional mindset, they say to themselves, okay, in a normal world where I understand each of the 11 sectors of the S&P, I may allocate the largest I would allocate would be 20%, let's say, to technology. That's generally the max in a mandate. I get Bitcoin. That's one asset. It's just like when you say, I'm going to have 20% in tech. There's 1,000 companies to choose from to build that position. So for me now to actually get into crypto, I need multiple positions because I'm mandated to have diversification. So yeah, I own Bitcoin. Yes, I have some Ethereum. I have some Litecoin. I have some USDC, but there's much more coming. And I'm at 3% right now, waiting in a mandate. That's not a lot. I'm on my way to 7% by year end. That's a lot. And that's starting to be where I consider myself a participant in this market. But I'm having to do it different than maybe you or Pomp or a lot of the guys that were pioneers. I don't have the option to be a cowboy. I can't do that. I have three problems on that front. Number one, I have to get my internal compliance officer to agree. Number two, I have to get my external auditor to sign the audited statements that then turn into reports to the regulators in every jurisdiction that I participate in. I cannot afford to be offside for 1 second. So that's taken a lot of time. That ain't easy. And that is where we sit. And I'd say to you, that's good and bad news. It's good news that I've been able to do it. It took me almost half a year. But the upside is that there's trillions of dollars of the people I service that want to do the same thing. If we could just get the regulator on side to tell us what the rules are, it's like football. You can't play football if you don't know the rules. We need the rules. Then you're going to get a massive allocation to crypto. What's interesting now about crypto, I don't consider crypto Bitcoin or Ethereum. Okay. Yes, they were the pioneering assets, but I'm considering crypto as the 12th sector of the S&P. It hasn't been declared that yet, but I think that's where we're going. And so when you talk about running a mandate like I do for institutional clients or institutional mindset, they say to themselves, okay, in a normal world where I understand each of the 11 sectors of the S&P, I may allocate the largest I would allocate would be 20%, let's say, to technology. That's generally the max in a mandate. And maybe you do 3% in energy because your ESG concerns are there and all the rest of it, but you're dabbling in all 11. I'm now dabbling in crypto as if it was the 12th. So that means I don't need a mandate to do that. I'm doing that because I'm able to get my compliance department to agree on certain coins, tokens, assets, but they have no interest in just buying Bitcoin. When it comes to crypto, because of the compliant and the regulations and where we're at, I don't put other people's money into crypto mandates. I'm very fortunate to have my own operating companies, multiple operating companies that I control in the case where this crypto is 100% control. So I am allowed, but I have to be compliant anyways, because when you have a compliance department, it's because you've been able to grow business. I have multiple investments in financial services companies, many of them which are reporting and regulated. So I can't be offside. Let me give you an example. Back in 2017, when I took my first position in crypto, the regulatory environment was nothing less than toxic, all right? At that time, regulators around the world were sending out complaints to all kinds of people that were trying to tokenize all kinds of assets, including one here in New York, a hotel. Over time, in particularly the last 24 months, you've seen Switzerland, Germany, France, England, Canada, a jurisdiction that cooperates with regulators in the US in total harmony, launch ETFs with their primary asset being Ethereum and Bitcoin. So the tonality of that regulatory environment has changed dramatically. You're starting to see the regulator, talking about, let's discuss these asset classes, let's get into a dialogue about it. And as a result, I've been able to be more flexible about my own position and come out and disclose just a few months ago that I'd taken on a 3% position in our operating company of specifically Bitcoin and a few others. But I agree with you on the thesis you have on Bitcoin, because when I talk to, let me give you an example, which is I think is very intuitive what you said there. Let's say I'm talking to a sovereign fund, all right? Let's say, and they have 500 billion, and they want to deploy into crypto for the first time, and they're going to put a small weighting, 1%. The reason they haven't done it yet is not because they're having a debate about whether they want to. They want to. But they have a compliance department that includes an ESG committee, which determines which assets get to the investment committee first, because every single asset is viewed with that particular sovereign fund by the merits of sustainability. It's getting addressed, and I'll give you an example. This is a shout out to a company I am a shareholder in, Hut8, all right? Jamie Leverton.
Yeah, she's great.
She is great. I met her through a real estate transaction, and we started having a discussion like you and I are right now about ESG. She said, look, I'm ESG compliant. But what I like about her company is that I can buy her equity, which I did at that time. I think I'm up 69% in the mandate that's in, because she claimed, and she was right, that she is in direct vol. In other words, the correlation between the price of Bitcoin and her stock price is 1-to-1. So she is keeping every awarded coin on her balance sheet. She doesn't sell it. She loans it out to get fiat and pay her expenses. And as a result, she's a proxy for Bitcoin in a compliant way that many of us can invest in. So the model for her, and I talk to her about this all the time, is don't go buying assets that are not ESG compliant. If you continue to mine on an ESG compliant basis, and you're a woman, and you have women management, because a lot of these sovereign funds demand compliance around diversification. I'm talking where there's billions of dollars, not buying $1,000 worth of Bitcoin, where they want to allocate huge dollars. Her model is going to be the model of the future for miners, which is why I made my biggest bet with her. Every time she looks at a new mining operation, it's got to be 100% ESG. That means it's going to push her to solar, it's going to push her to wind, it's going to push her to any compliant way, maybe burn off of gas and use it productively as she does in northern Alberta. But Bitcoin, to me, as that asset class, is not a currency. It is an asset, because the plans I'm talking about, the sovereign funds, they want to buy the coin and never sell it, never trade it. So if they felt that they could buy her stock, for example, and know that she would, guarantee them that she would only mine new awards sustainably and she never would sell the assets, they may consider that as their proxy for Bitcoin, which is, I think, a big opportunity for them and other miners as well. So I talk to all the miners all the time. They're always soliciting funds. If we solve this in the Bitcoin asset community, whatever you want to call it, you're going to see $1 trillion worth of fiat currencies going to Bitcoin as an asset, just like real estate. And I think you want to talk about $100,000, $200,000, $250,000, coin price, it has to solve this problem.